Good afternoon from Cape Town, and welcome to our webinar on global citizenship and immigration. My name is Anthony Palmer, Group Commercial Director for Carrick, which is a boutique wealth management company specializing in offshore financial planning and investing. Today's topic has unfortunately attracted a huge amount of interest. Last time I looked, I think we had about 348 registrations. And I do say unfortunately, because it is a sad reality, and in my mind, actually quite a tragedy that so many families are leaving our beautiful country. We do have to stay positive and trust the future, but we also do need to play the cards that we are dealt and to take control of our destinies. That generally means physically packing up and leaving for foreign shores, or having a plan B involving foreign visas and passports, and most of our assets already moved offshore. Both these paths require well-considered and bold decisions with all the facts at hand. Today, we will hear from experts in their respective fields to help us piece together all those facts so that plans can be made and action set in motion. Moving to a new country is one of the top 3 most stressful events in life. I've personally done it 3 times, firstly moving to the UK, then to the US, and finally back to South Africa. And just like you, I'm again having discussions about what a potential 4th move would look like, as I wonder about my children's future with our frightening crime rates, faltering economy, and unemployment challenges. Moving is daunting. It took my wife and I between 6 and 12 months to fully settle into each country. And one of the lessons learned was that careful planning and definitely, mapping everything out makes the transition a hell of a lot easier. That is what Carrick can assist you with, assembling a team of dedicated professionals to take away that stress and the paperwork so that you can focus on what really matters. Here to help us join the dots today is Ilana from Henley and Partners, global leaders in residency and citizenship planning. They have over 25 years of experience to draw from, with 30 offices worldwide. Ilana will be talking to us about the available residency and citizenship programs, which ones are getting the most attention by South Africans, and why. After that, we will hear from Tania Mancini, Financial Immigration Specialist from Currency Partners. Currency Partners assist both companies and individuals with foreign currency planning and execution, and all aspects of financial immigration. Tania will walk us through the various steps to plan a clean exit from South Africa. And as an aside, Currency Partners have been saving our clients on average 2% on the FX transactions, depending which retail bank clients would normally have used. Henley and Partners, as well as Currency Partners, are both part of our concierge offering and have been providing a fantastic service to Carrick clients over the years. For those of you that are new to Carrick, our core strength and focus is offshore investing. We first look at how you hold assets, which ranges from a simple overseas bank account all the way to complex and bespoke structures that ensure maximum growth, asset protection, tax efficiencies, ease of access, estate planning, and succession planning. We then build bespoke investment solutions to fit your specific requirements. Our reach spans across the African continent, and to date we have offices in South Africa, Zimbabwe, Malawi, and Mauritius, with a strategy to be licensed in a further 17 African countries over the next 5 years. Our UK office will be open in February, and we are currently also licensed to write business and advise US residents. Communication and education are key components of our DNA, and we always strive to provide interesting and relevant information to our market. On that note, I would like to hand over to Ilana and Tania, after which we can open up to some questions.
Thanks, Anthony. Hi, everybody. Like Anthony, I have lived in 4 different countries over the last 15 years. Fortunately for me, I was married to my tax advisor, which, well, I'm still married to him, made my life significantly easier. Staying on the right side of SARS is always a good idea. So we returned to South Africa 4 years ago. And as Anthony said, we also considering where to next. So we're all in the same boat in many ways. What I'd like to do today, before I hand over to Tania, is just briefly set the scene to show people what all the options are, where you can obtain residency or citizenship through an investment option. Most of us are aware of the fact that you can sometimes on a skills basis relocate if you get a job offer or if you have ancestral rights, but many of us can't do that, and many of us are too old to qualify for those. So Indian Partners specifically focuses on citizenship and residency by investment. We don't do any other work. We can point you in the right direction, but this is our expertise. The slide on the screen just shows where we have offices at the moment. We offer more than 30 programs globally, but these dots indicate where we actually have a presence at the moment. Before I continue, I think it's important for us to just be aware of the difference between citizenship and residency. We often get asked that question. And there are some programs that purely offer residency, and then there are programs that can lead you to citizenship, or there are programs where you can directly apply for citizenship. Citizenship is when you ultimately end up receiving the passport of that country, which most of us do because it gives you the right to live, work, and study in that country. It gives you some travel benefits, and very importantly, it affords you the benefits of the state. So if you become a citizen of a country, you have the right to vote, and when you get into trouble anywhere else in the world, you can call on the state to rescue you or to help you out with whatever issues you have. On the other hand, residency is sometimes just used for tax purposes. In South Africans' case, it's not that easy. Tania will maybe talk a bit more about that later. But when you get residency, specifically in Europe, you often get Schengen travel benefits, which is good for us on a South African passport, and you get the right to live, work, and study in that particular country. So just residency can sometimes be good enough. Although we're specifically talking about financial immigration today, I think it's important to note that there's multiple reasons why people take up alternative citizenship or residency. It's not just because people want to leave the country. So many of our clients come to us and we talk about an insurance policy or a plan B. So maybe starting this conversation doesn't mean you necessarily want to leave right now. Maybe the kids want to finish primary school, or you want to get to retirement age, or you still have elderly parents and you don't really want to leave now. But you have to start the work to get that plan in place, because you cannot immigrate somewhere unless you're welcome there. You have to set that plan in motion. And it very often takes at least 6 months. Some of the easier programs are 6 months. Most of them take 12 to 18 months before you get an invitation to move there and to relocate. So it's important that one does this planning well in time. I think some of the other obvious reasons that we're seeing an uptick in business at the moment, not just out of South Africa, these are global issues, is we're getting a lot of inquiries from people about health and safety, specifically at the moment because of the pandemic. Our clients are asking which countries have dealt with the pandemic well, which countries have very good healthcare services. A lot of things happening on that side in South Africa as well. Political issues, security issues, education issues, legacy for our children. There's so many reasons, and I think the fact that there are so many things motivating our clients means that every single client is different. Anthony, you said I'm going to talk about the more popular programs, and there are 2 or 3 that we get more inquiries on, but literally every single consultation I have every single day is different, 5, 6 conversations. And depending on the family size, the family structure, the age of the children, the funds available, every consultation is different. There is no one perfect solution for anybody. I'll start with the most popular program. So there's 6 slides that I'm going to go through that just breaks up the world in different regions and shows the types of programs that people can invest in. I think the RBI refers to residence by investment. So these are probably the more commonly known programs in South Africa. I think everybody on this call must at least know of someone or has a friend that has done the Portugal Golden Visa program, or somebody has spoken about it. It's a very popular route for South Africans. It's a great lifestyle. It's a fairly easy program to follow. There's multiple investment routes, and it can lead to citizenship after 5 years. Whereas Cyprus, on the other hand, is interesting. Cyprus as a residency program only leads to citizenship if you physically move there and live there. So for somebody looking to financially or tax immigrate, Cyprus is a very good option because you don't have to learn the language. You simply have to go and live in paradise. It's a old British colony, which for some people is good, for some people is bad, but it does mean they drive on the same side of the road as us. The schools are English. Everybody speaks English. It's a very well-developed country. I spent many happy holidays there while I was living in Dubai. So it's a good alternative for people. Greece, Italy, and Malta are different types of residence programs. Greece can lead to citizenship, but you have to learn to speak Greek fluently. Whereas in Cyprus, you don't have to learn to speak any other language. Italy is very much a tax play, so people that relocate to Italy are trying to consolidate their global tax basis. It's a much more expensive program to follow, and only really suitable for ultra high net worth individuals. Malta very popular for our younger families because it has a very good education system. Once again, legacy of the British days. There's very good elementary schools, high schools, very good university. It is a really good option for people to relocate and to go and settle in, very well connected to the rest of Europe. You are allowed to work there once you get residency, but it does not lead to citizenship. There is no ways that you can become residents in Malta and then become a citizen unless you follow the actual citizenship program. So if we look at the citizenship program, while we're on the topic of Malta, the only way to become a citizen of Malta is to make a significant donation to government. And many South Africans kick against that. The idea of donating money or giving money away seems to just not sit well with us. But as soon as you start thinking about the long-term benefits of that, and you think about this in terms of leaving an early legacy for your children, instead of leaving them shares or a property or an investment portfolio, sorry, Anthony, taking a bit of money away there from Carrick. But if you think about it as an early legacy, then it really becomes worthwhile, because what this does, a Malta passport will give you the right of establishment anywhere in Europe. It's passed on to future generations. Your children's spouses and children will automatically get citizenship. So it's a very good, well-structured program. One of the programs that we designed through our government advisory business. The Cyprus citizenship program, a little bit different, significantly more expensive than Malta, as you have to make a €2 million real estate investment in Cyprus, but the donation portion is significantly lower. So it really depends on what it is that people are looking for and how they feel about their investments. Probably the most popular program at the moment, quite a new program, is Montenegro. It's not that well known yet. The reason it's pitched at a much lower price level, makes it more affordable for South Africans, is because they're not a member of the EU yet. They've been a candidate state since since the mid-2000s. They've joined NATO, they've joined the currency union. They're on track to become a full member of the EU by 2025. But it does mean that at the moment it's relatively cheap to obtain that passport. So you can make a real estate investment in Montenegro, immediately get your passport and your travel benefits, and in 4 to 5 years' time, when they're a full member of the EU, you and your family will have European passports. Turkey, not that popular in South Africa. We do get some inquiries, and mostly it's not because people want to relocate to Turkey. They want to use the E2 visa treaty that Turkey has with the US. So you make an investment in Turkey, get your citizenship there, and then you're allowed to make a business investment in the US and get a foot in the door in the US market, so the kids can go study there, the spouse can work there. It becomes a good residency option as a stepping stone towards the US. Austria really only suitable for ultra high net worth individuals. You either make a €3 million donation to the government, or you invest €8 million and you commit to make a significant contribution for the longer term. So the best passport you can get, but that's very much reflected in the cost of the program. In terms of what we would consider immigration programs, and Tania's got a lot of experience on these immigration programs. These are Canada, the UK, and the US. So typically with these programs, you have to qualify on either a business basis or make a minimum investment. And once you get the invitation to go, the expectation is that within the next year or two, you pack your bags and you relocate. So this is not a plan B, this is a plan A. If you start this route, you have to be committed to relocate and move there. Canada does not currently have a passive investment option. That was suspended. The Quebec program was suspended earlier this year, and they've continued the suspension now for another 6 months. So we don't know when that will come back. The only way to get into Canada at the moment, unless you qualify on a skills basis, is by making an investment in a business. So you have to follow one of the provincial nominee programs. And we do quite a bit of that business, but it's not a passive option. You have to be willing to move there and work. I am just, there we go. I think I missed a slide there. Let me just go back. Apologies for that. There we go. Australia, New Zealand, and Hong Kong, these are our Asia Pacific programs. I think for obvious reasons, Hong Kong is not getting that much attention at the moment. I haven't seen any inquiries for people wanting to relocate to Hong Kong. Our Hong Kong office is doing a lot of business out of Hong Kong to other destinations at the moment. New Zealand, I think, a similar program to Austria, very much focused on ultra high net worth individuals. It has become the health and safe haven for the ultra wealthy. Relocating there is not cheap. And they also have very high requirements. So it's not an easy program to qualify for. The due diligence we do beforehand is extreme. And we really have to be quite sure that you will qualify before we recommend that you go to New Zealand. Australia, on the other hand, very popular for South Africans. So many of us have friends and family that have lived there for many years, and there's multiple different business streams that you can follow to get into Australia. So we do offer the significant investor visa, which is a 5 million Aussie dollar investment, but it comes all the way down to the 188 A, B, and C visas, where you have to prove that you are currently a successful business entrepreneur, that you own a business, that you have a good turnover, and that you have a good business plan to take to Australia and go and add value in Australia. So we're finding that the Australia program is very active at the moment, and certainly a good destination for South Africans. And the other programs, which is probably not well known at all in South Africa, simply because of the location. Malaysia has a program called Malaysia My Second Home, MM2H. It's currently suspended, but they just had a backlog of admin that they're trying to catch up on. Very good program for people looking for a retirement spot, a safe haven. I own property in KL, and it's a beautiful place to live, very accessible to the rest of the world. Everybody speaks English, the food's marvelous. It's a good location to look towards into retirement. Thailand, fabulous. It's more of a holiday visa. It's a long-term holiday visa, but we've seen a number of clients move to Thailand, especially when you have a situation where, for instance, the spouse works. My last client was a spouse that worked on the mines in Africa, and the family lived in Durban, and whether he comes home to Durban or whether he goes home to Thailand doesn't really matter to him. So he relocated the family to Thailand on this visa, and they've exited South Africa, and it's business as usual for them. So a very specific program, great for golfers, if there's any golfers out there. The last slide I want to talk to is the Caribbean programs. These are not typically used for people that are looking to exit South Africa. These are really excellent travel documents, with two exceptions, where Grenada and St. Lucia both have exceptional universities that offer kids a very good future education opportunity. And Grenada, like Turkey, holds an E2 visa with the US. So we often find that people invest in Grenada, get that citizenship, so you get the immediate travel benefit all over the world, but ultimately the plan is to invest in a business in the US and get the right to live, work, and study in the US by using the E2 visa treaty. And whether you use Grenada or Turkey very much depends on the places you want to travel to and the kind of investment you want to make. So one has to do that comparison at the time when we do the consultation. All the programs offer a route either via donation or via real estate investment. And most recently, St. Lucia launched a government bond option where they called it the COVID bond offer. It's a zero coupon bond where you invest an amount over a 5-year period and you get your capital back after 5 years. But that's a very, very quick and very easy program to follow, and a much more exclusive passport option at the moment, simply because it hasn't been that commonly used in the past. All of them are members of the Commonwealth, so you get a Commonwealth passport, you get access to the UK for 6 months of the year, and all through the Schengen for 3 months in any 6-month period. So very good travel documents. And Anthony, maybe your Durban colleagues will have clients that live up and down the coast there that actually want to move to the Caribbean to go sail a boat or live on the beach. I'm sure there are people, although we don't get too many inquiries of people physically wanting to move to the Caribbean. But they are good travel documents and stepping stones to something else. So just the last slide, just to recap, these are all the programs that we offer. And as I said in the beginning, it really does require individual consultation. There is no one program that works for everybody, and every family situation is different. So it's important that we have an actual consultation, we talk through the process, and sometimes it takes a couple of meetings before we decide which is the best location for somebody to go to. That's it from me. Thank you very much.
Ilana, thank you very much. Tania, just before we go over to you, Ilana, a very, very common question that I get, I'm sure you get all the time as well. Can you take siblings? Can you take parents? You know, can it extend to kids? If you can maybe just talk to that.
Interesting. So once again, each and every one of these programs are different. So because we have a government advisory division within Henley and Partners, that's where the business started all those years ago. We work very closely with governments when we develop these programs, and the way they develop the program is very much dependent on what their laws say. So these programs are different because every country's laws are different. So in the Caribbean, you can typically include your parents if they're dependent on you and over a certain age. Every country is a little bit different. You can always include your children up to a certain age. In some countries, it's up to 29 or 28. In a place like Greece, you can only include your kids up to age 21. In Portugal, you can include your kids when they're single, dependent, and full-time students, and they have to remain in that status for the whole period of residency, which is why we often get families come to us on the Portugal program with that inquiry, but the kids are already 21 or 22, and that, you know, it feels like an unnecessary burden to put on a child to say for the next 6 years you are not allowed to marry, stop studying, or start working. You have to stay on dad's budget. You know, it just doesn't always make practical sense. So then people start looking towards Montenegro, which allows you to include those children because it's an instant citizenship program. It's not residency. So every country is different, and some are cheaper and some are significantly more expensive depending on what you do.
Perfect. Thank you. Tania, over to you.
Sure.
Yeah. Firstly, we'd like to thank Carrick for including currency partners in on the webinar. So today I'd like to take everybody through the process for financial immigration. So what is financial immigration? I think that there's a lot of confusion around financial immigration and actual immigration. So financial immigration gives you the ability to terminate your SARS tax residency status, and it also terminates your SARB residency status for exchange control purposes. So what does our financial immigration offering include? And I'd just like to add that we facilitate the entire process. So we do the full process for financial immigration. We do the financial immigration application with the Reserve Bank. We obtain the required tax clearance certificate from SARS for immigration purposes. We open up the necessary blocked RAND accounts with the various authorized dealers. We also do the withdrawal of policies, retirement annuities, and pensions. And I'd just like to add there that a retirement annuity can only be paid into a blocked RAND account. It cannot go into a savings or a check account. The various fund houses are regulated to only pay into a blocked RAND account. We also obtain the required tax directive from SARS when we do the withdrawal of the retirement annuity, and we do the submission of the final tax return with SARS. The most important part of this entire process is deregistering the income tax number with SARS. So without the completion of deregistration, the process isn't actually complete yet. So I'm going to run you through some frequently asked questions that always come up when we assist clients with regards to financial immigration. So what is the difference between financial immigration and leaving South Africa? If you have left South Africa to live abroad and have not notified the Reserve Bank of your departure, you are still classified as a South African resident deemed to be living temporarily abroad. You are therefore still subject to the same tax laws and financial regulations as a South African resident living in South Africa, and by financially immigrating, you have solved yourself of these resident obligations. So why do I need to consider financial immigration from South Africa? 97 countries have joined the Common Reporting Standard System for automatic exchange of information to combat tax evasion. Effective from March 2020, South Africans living permanently abroad who have not formally immigrated have a tax obligation to SARS on earnings over a certain threshold, which may result in double taxation on earnings. This can be avoided by placing your immigration on record with the Reserve Bank and thereby terminating your resident tax status with SARS. So do I need a tax clearance certificate from SARS to immigrate? A tax clearance certificate from SARS confirms that your tax affairs are in order. A tax clearance certificate may be required to immigrate, depending on the number of years you have lived abroad. However, a tax clearance certificate is a mandatory requirement to withdraw your retirement annuity, irrespective of how long you have lived abroad. So the next question comes up quite often, and I'm going to explain once I've given you the answer. So no, after financially immigrating, you are still required to be a South African citizen and will retain your South African passport. So when we do financial immigration, we facilitate the transaction through SARS and the Reserve Bank. Home Affairs is an entire different entity, so you will still retain your South African passport. Do I need to close my SA bank accounts in South Africa? Yes, so all available balances must be held in your immigrant blocked rand account, opened with an authorized dealer as part of the immigration process. Your remaining assets, as declared on the MP336B form, must be managed via this account. Can I financially immigrate if I have debt in South Africa? Yes, however, your immigrant blocked rand account will need to be opened with an authorized dealer holding the bulk of the liability. So I'm just going to give you an example where we can assist in that instance. So let's say you've got a retirement annuity to the value of 100,000 Rand and you owe 20,000 Rand on a credit card. We will be able to assist with your financial immigration application because your asset value is higher than that of your liability. So once the retirement annuity pays out, we will actually pay the funds to your credit card and clear that balance. When it comes to if you have a home loan, you will go through an authorized dealer holding the bulk of the liability. And the reason for that is because they need to go to the Reserve Bank every month and report that that bond is actually being paid. So they will then manage the control of that liability. Can I have a debit order on my blocked rand account? Yes, you can. So for instance, I have a few clients that will still have property here in South Africa and need to pay their monthly insurance. Yes, and therefore you can put on a debit order on your blocked rand account. What are the advantages of financial immigration? So these are the three areas where we generally assist with financial immigration. So by financially immigrate, you can surrender your retirement annuity, access a SA inheritance, terminate your SA tax obligations with SARS, and thus avoid potential income tax from SARS on your foreign income. How long does the financial immigration process take? To conclude financial immigration, it typically takes up to 3 months. What will happen to my remaining South African assets if I immigrate? So any remaining South African assets will be placed under the control of the authorized dealer that finalized your immigration. This is to ensure that all capital accrued after the date of immigration and the proceeds of any assets subsequently sold can be credited to the immigrant's capital blocked rand account. These funds may also then be utilized locally for any purpose. Can I return to visit or permanently reside in South Africa after immigrating? Yes, you can visit without limitations, but you'll need to place your return on record with the Reserve Bank to become a permanent SA resident again. Can I immigrate if I don't have an SA income tax number anymore and have lived abroad for a number of years? Yes, if you have had an income tax number with SARS in the past, this can be reactivated for the required tax clearance certificate to be issued. What happens to my income tax number after I immigrate? As part of our service, we will deregister you with SARS, making your income tax number inactive. This can take up to 6 months. Do I have to transfer all my assets abroad once I have immigrated? No, assets can remain in South Africa and any transaction debit orders can remain valid as before. So clients will typically ask me, do I have to sell my house in order to conclude financial immigration? No, you do not need to sell your house to conclude financial immigration. So what is the process to apply for financial immigration with currency partners? So you'd contact your Carrick Wealth Advisor on the email address provided to discuss your personal circumstances and to answer any questions you have. Carrick will register you on the Currency Partners online portal. They will then contact the applicant with detailed steps and outline any supporting documentation required. We'll also assist the applicant to complete the required MP336B form for the SARB. This requires the client to declare their assets and liabilities and provide supporting documentation for each. A certificate of naturalization or citizenship must be provided where permanent residency has been granted in the foreign country where the applicant is residing outside of SA for more than 5 years. SA and foreign ID must be provided for all applicants, ID, passport, visa, or certificate of naturalization for minors. I'm just going to mention here, I get a question quite often in terms of, I only have a visa and I don't have my residency yet. Can I do financial immigration? Yes, we can assist with financial immigration. If you're only on a working visa, you just have to confirm that you're a tax resident of the country that you're living in. So we will just require a copy of your visa to be able to assist with financial immigration. We also need a letter of authority to assist with the SARS application, and we'll obtain the tax clearance certificate from SARS where required. So that's Currency Partners, financial immigration. I'd also just like to mention, obviously, there's been quite a few reports out in terms of the media. This is the withdrawal process as is for the withdrawal of a retirement annuity. So there have been, obviously there's a proposed bill that's come out, but this is as the process as stands today with regards to financial immigration and the withdrawal of retirement annuities. So thank you very much. And if you have any questions, I would be happy to assist.
Thanks, Tania. Excuse me. So to the listeners, that does sound all pretty daunting. It's not as bad as it sounds. The key, I think, is just to have a team that can, as I mentioned in my introduction, that can lead you and sort of hold your hands through the process. What really gets me is that blocked account. When you leave, it is a really permanent effect, and you've got viewing rights on that blocked account, but not transactional rights. So any income that let's say you've got a rental property still in South Africa, that rental income has to go into the blocked account. As Tania said, you can have debit orders coming off that account, but in effect, you've left South Africa. It's an emotional and financial, huge decision, and does need to be done correctly. Tania, what happens if you financially emigrate and then decide to come back to South Africa?
So we would just do an application to the Reserve Bank. It also depends on the period, the time frame. So if it's below 5 years, we see it as a failed immigration, and we would do an application to the Reserve Bank to advise that the client has returned back to South Africa.
Okay, and are there penalties involved? Because 5 years is a long time.
Yes, there are penalties involved, but I think you treat it on a case-to-case basis. So obviously we would look at in terms of the value and how long they've been overseas and so forth.
Okay, all right. And I know that you're not a tax expert, but I think it's important just to paint the picture for everyone. When you do leave, there is if you think of it as an exit tax, there is capital gains tax that's payable on your worldwide assets, and that does exclude certain assets such as your fixed assets, property, etc., shares. So those are all considerations, and simple considerations like Ilana. We've had a couple of clients, in discussion with you where they've got a number of dogs or a number of cats, and that actually dictates where you can go. Maybe just speak to that a little bit.
All right, yeah, I've had a few interesting inquiries. We're not relocation experts. My job is to find the best country to move to, but sometimes it does involve that conversation. And one of my recent clients actually said to me, he has 7 dogs and they wanted to move to Portugal. 5 is easy, 7 is difficult. And because of the paperwork and the documents involved, etc., 2 of the dogs are quite elderly. He's actually parked his decision for a couple of months until the 2 oldest dogs pass away, which is a practical thing, and I think people don't always think about that. I think just on something Tania mentioned that I didn't talk about earlier, we often get asked if South Africans are allowed dual citizenship. Of course, we wouldn't be promoting these citizenship programs to South Africans if you weren't allowed to, but there is a procedure that you have to follow with Home Affairs. You have to register that with them. So there's a little procedure you have to go through, and sometimes clients go through this without doing that, and then they lose their South African passport, and it's a significant process to get your South African citizenship back if you give it up accidentally. So that's all part of the planning process. Some of the countries we deal with don't allow dual citizenship. Austria, for instance, Latvia, which is not popular out of South Africa, Singapore. But once you get that citizenship, then I think you're probably okay giving up the South African passport, other than emotionally distancing yourself from it. But most of the countries we deal with allow dual citizenship as well.
Okay, thanks for that. And then I'd like to delve a little bit deeper into Portugal, because it is such a popular choice for South Africans. Have you got experience of clients that have gone through the whole process and everything's worked out smoothly? If you can talk a little bit about the exams that you have to take at the end and client experiences through the whole process.
Yes, it's been quite interesting. The program changed about 18 months ago. Initially, you had to have residency for 6 years before you could apply for citizenship, and they changed that last year. So they started taking applications for citizenship last year after a 5-year period, and there has been citizenship issued. Our own office has issued their first passports in Portugal only in the last few months. But there's been multiple successful applications, and you do have to go through the whole process. You have to every year qualify. You have to follow the rules. We have a big office in Lisbon, a few South African Portuguese ladies that work in the office there, so that always makes our clients feel happy and comfortable. But we hold a file for you, and you have to tick all the boxes on that side in terms of the annual visits, and you definitely do have to pass a Portuguese test. Every now and then we excuse me, we hear rumors from people saying, typically it's real estate agents trying desperately to sell product that say, oh, don't worry, they'll waive the language test, but they haven't. Most countries have a language test if you have to go through residency and then qualify for citizenship. And the Portuguese authorities simply feel that if you're going to walk around with a Portuguese passport, the least you can do is learn to speak a bit of the language. So you don't have to be able to write a thesis in Portuguese. It's not nearly as onerous as the Greek program. But in Portugal, you have to speak, it's called the level A2. So you have to be able to hold a conversation. It's a little bit more than touristy Portuguese. If you apply for citizenship, you have to do a physical test. It's a 3-part test. So it's a verbal test, a written test, and then some comprehension test. And you have to pass the test to get your citizenship. If you fail, you can apply again. It's not the end of the world. It just means you have to pay the renewal fees for another 2 years. If you apply for permanent residency, the test is not that onerous, but it still exists. You have to then use your language school to give you a certificate to say that you've passed. And yes, your kids also have to learn the language. And no, not only the main applicant has to learn it, everybody that wants a Portuguese passport has to learn to speak Portuguese, including grandma and the little kids. So for the little ones, at least, they allow the schools to issue the certificates as well. So your 6-year-old doesn't have to go and actually it's only once a 12-year-old that they have to pass the test. But so your little child doesn't have to go for a scary test. The language school can just say they're proficient or not.
Okay, perfect. And the questions come through. What about South America, Panama, for instance?
Interesting. That's a kind of a little bit from the frying pan into the fire would be my response. We do not offer any programs in South America. We have a large office there that does a lot of business out of South America to other countries. I am aware of a group of South Africans at the moment that's very active and a lot of people that have moved to Panama. But Indian Partners is about improving people's global mobility, on helping them to obtain a better, safer jurisdiction to move to. It's about creating better opportunities for the future, for your kids' education, a safer place to do business. It's all about mobility, safety, security, health, and Panama just does not tick that box.
Okay, perfect. And then, Tania, you mentioned a few times pensions, retirement annuities, etc. So yes, if you financially emigrate, you can take your retirement savings with you. There is that 3-year rule that's going to be implemented, but a lot of careful consideration needs to be given to that, please. Main reason being that your pension is fully taxable when it comes out of the pension system. There are other options. So, for example, if you're over the age of 55, you can retire into a living annuity, and asset swap 100% if you wanted of that into hard currency investments, into a nice diversified portfolio. So please, do seek advice. Don't make rash decisions, because if it's a big pension, you're almost cutting that pension in half by moving offshore. And that's where careful financial planning comes into consideration. We'll look at your expenses in your country that you're moving to, make sure you've got enough liquid assets, etc. But often we do see people's money leaving before they leave, and again, you have to look at the best way to do that. From a tax perspective, that drives a hell of a lot of decisions, as well as succession planning. When you have hard currency and you pass away, it really becomes a nightmare for your executor to wind up. Often you need a foreign will, you need a foreign executor. It's expensive, it takes a lot of time. So there aren't any more questions that have come in. So I think what we should do is wrap it up there. It's been 45 minutes, a nice, short and sweet and sharp. I hope it's been useful for everyone. And I do want to thank Ilana and Tania for your insights. We will send everyone on the webinar an email just to get some feedback and see if you want any follow-up. But other than that, I would like to again thank you all very, very much for joining. I hope it was insightful. And thanks again, and please stay safe over these times. Take care.